Welcome to the Asset Revolution podcast, where each week your hosts from Arbor Digital provide educational opportunities for financial advisors and individual investors to gain knowledge in this emerging powerhouse that is digital asset investing. The Asset Revolution podcast is your connection to the future of digital assets and an opportunity for anyone to get off zero. Let's dive in. Welcome back to this edition of the Asset Revolution podcast, where we answer two fundamental questions: what's revolutionary and what's evolutionary about blockchain technology and its application to today's world. Today, I am extremely excited to bring someone who I've probably thought about a little more than I'd like to admit, based on the work that she's done with previous firms. But Kelly Yee, you're coming in. You are now the head of research at Decentral Park Capital. And as I just mentioned, you've spent some time at some other shops like Fidelity Digital Assets, where you were responsible for many things across the product spectrum there. So Kelly, thank you so much for taking the time today to join me.
Thank you, Mark. It's great to speak on your podcast.
Yeah, and then we're going to dive into so many things aside from the two questions that's going to ignite. But what I'd really like to jump into first is just, in your words, just introduce yourself and maybe talk a little bit about your journey into crypto.
Yeah, wow. Thank you for the opportunity. Thinking about my journey into crypto, it's a long story. I define myself as a TradFi convert to crypto. So I have 15 years of traditional finance background in both investment and research across asset classes. And I was really fascinated by the amount of creativity and sophistication in this market. So you may have heard the story. I started my career at the onset of the financial crisis in the very product area of credit derivatives. So it's not the best time to start one's career, but the best time for me to see how financial innovation can be a double-edged sword. When used innovatively, you can really make efficient risk transfer. But if you overestimate or underestimate the risk, it can obviously cause troubles. So my last traditional finance career has been leading research at Index IQ, which is the ETF platform for New York Life investments. And they were very well known for liquid alts. And as you recall, in the not so distant past, right before COVID, right, we're in a period where S&P is returning 50%. Nobody wants liquid alts, which is returning cash plus 2, which is 0 plus 2, right? So I was looking at where do you source return, liquidity, and hopefully also low correlation with the equity market. That's how I went down the rabbit hole in Bitcoin 2017, and I want to do Bitcoin or crypto for my career. And so I finally joined CoinDesk Indices, which is a DCG company, and help them build the index and data business. My proudest baby is actually defining the taxonomy, which is defining what do sectors and industries mean in crypto. And then from there led to my career leading product at Fidelity Digital Asset Management, trying to build an investment business, and now at Decentral Park Capital, which is a thesis-driven liquid venture shop.
Wow. Okay. So there are so many things we can dive into. That is a very robust and rich background spread across a lot of body of work. So I guess for me, what I always love to get out of these two is, because this is a part where we talked a lot about technology, take me into the human side. What was it that was the thing that ignited you to take the leap from that traditional world into this crypto world?
Yeah, so I actually grew up in China, and I came to US for grad school and then working. So when I dig deep into the blockchain technology, right, it initially is the technology that fascinates me, but ultimately it's what the technology can do, exactly to your point, right? And what the technology enables. So blockchain is essentially really trying to enable a computerized trust without intermediaries that allow people to conduct peer-to-peer transactions in a trusted fashion without any intermediaries, right? Think about what doors it may open, right? So you and I, if you send money to me or I send money to you without any trusted parties, we have to rely on banks or payment systems. But with this new trusted framework, we can not only do business with each other, but also think about how we can organize each other into different groups that are outside of the boundaries of countries or companies. And you and I can be related based on shared belief rather than just what our skin color or what our companies, are trying to do. So.
Yeah, again, so many facets we can dive into there, but I like that. I think it's very similar. I think it sounds like there was an intellectual curiosity in the technology, and then when you coming from your own background personally, you can see how that can apply to the world today and again, this actually goes into our first question, right? How is this technology revolutionizing things? Why is this revolutionary? And so you mentioned the payment system, and obviously we're seeing a lot happen in that sector in the traditional world and how there's applications already being built. So I guess I'd like to talk a little bit more about that. Take us through just your thought process to where, like, that's great. There are so many things that come across that seem revolutionary, that seem like they're going to do it. Why is blockchain technology? Why was this the thing that it's actually going to take hold? What do you think on that?
Yeah, so maybe I'll make it a little bit more general, right? In addition to payment, let's think about the financial market itself, right? So what is a financial market? Simple definition, actually copied from Google, right? So it's a platform that provides buyers and sellers the means to conduct transactions on financial instruments, right? So because buyers and sellers don't necessarily know each other, and they don't know the issuer of the financial instrument either, right? So we really have to have sophisticated rules to govern the transactions themselves and to govern how issuers are issuing their products. So think about our financial system, right? We have investors, the end investors, they have to trust fund managers to select securities for them. Fund managers have to trust market makers to conduct efficient transactions and give them a fair price. And market makers have to trust all the downstream system in terms of proper settlement, record change, record keeping, and title exchange, right? So now think about what blockchain enables, right? So instead of having so many layers of trust, which also result in so many rules, paperwork, systems, if I could conduct transactions with you without all those intermediaries, but also in a transparent fashion, where all the transactions are recorded on a ledger that can be verifiable, that's not immutable, that's immutable, and also in a peer-to-peer fashion. Think about that, what a world this technology will open, right? So not only in payments, but also in potentially transactions of goods and services. I think really this technology, what they're really trying to do, when you think about another topic we can discuss about AI is, right, is really about defining the rules in a transparent fashion and finding a way to enable those rules in an automatic way without centralized parties.
Yeah. Oh, so it actually like goes into you mentioned computerized trust, and you've mentioned that word a couple of times now too, where I think it's revolutionary to changing the way in which we trust that these transactions are handled. And in the current world, they're handled by so many layers of intermediaries, but everyone's got to trust. There's layers of trust layered within just the technical aspect of making these transactions happen. And I think that's where it seems like there's a confluence of things in our financial market infrastructure. And I guess when we say we're predominantly in the US, so I think we got to make that distinction too. We're talking more US based, but this obviously has implications on a global scale, especially with the US dollar for the moment still being the reserve currency of the world, if you will. So trust, right? I think it all comes down to that. And that's where I think revolutionary, I always think of that aspect is like, these are new trust models. And obviously with anything new, it's very scary, especially for those who have built and been a part of building the current roads in which we all drive on in the current financial market system. So I can see why that there's a lot of pushback or resistance or inertia, if you will, to that. So what have you seen in your experience so far making that leap from TradFi into crypto? Take us through a little bit of that, what you're seeing. Even though it's so revolutionary, it seems that there's still a lot of pushback and a lot of resistance to this change.
Yeah, I think pushback and resistance comes in many different aspects, right? I think the first layer is the technology itself. Has it been battle tested enough so that it can not only handle the amount of volume we are doing in the true financial market without glitches or hacks, right? That's only the first layer. And think about the second layer, which is the rules layer, right? So as you see some of the rising decentralized exchanges, for example, the rules is very simple, right? X times Y equal to K, which is basically a simplified version of determining market prices, right? That has been very revolutionary, but does it handle all the edge cases? Does it really provide the same amount of efficiency and liquidity, right? So that's at the rule layer. And ultimately, it's at the, I would say, investment layer, right? So imagine in the perfect world, blockchain technology will disrupt everything we do. Would investors trust to invest in those blockchain-enabled businesses versus the traditional business we see, right? So you see that disruption and trust in all those layers. And I always make this interesting analogy, right? I own a very old house. It's built in the 1910s, right? So when it comes to renovation, and then there's only certain much you can do, right? It's a great house, it's still standing, but let's say if I want to use renewable energy or expand my energy usages, they're saying you have to basically relay all your wires, right? I think our financial infrastructure currently is like a giant castle or a very old house, right? It has been battle tested. It still lasted over all those time, right? But the infrastructure inside is very stale, right? So now you have to think about, do I do reno to your analogy on revolution versus evolution, right? Do I go with the evolution route where I gradually upgrade my systems to get there? Or is my system too stale that I have to completely revamp it and relay the wiles? So that is the revolution part. I think we're at a stage where, Bitcoin itself, right? It started in 2000. It has been more than 10 years. So it has been sort of, people now realize, I think a lot of the financial pundits have came out and say it's not a fraud. It can really be, very useful in many different ways. And a lot of the emerging applications are still at the very early stage, right? So I think some of the entrepreneurs, especially now I see more crypto native people, super sharp, super passionate about the technology and what they can do, but they're also taking a step back and trying to learn what are the real problems financial market is trying to solve, why we have to have certain regulations that are aimed at protecting investors, right? So they're at a stage where I want to learn from institutions. I want to make my applications better. On the other hand, as you see the evolution of institutions too, me coming from several of them, right? I can see they are also taking a step forward in terms of, now I cannot ignore this technology, right? Shall we do a proof of concept, which a lot of them have already done, right? Or shall I actually bring this technology in-house to do some real business out of it? So Fidelity, for example, they have the custody and trading business already, and they are building up this investment management side. So basically, I would say institutions are looking at potentially two things, right? One is crypto as a technology, which is how can I enable blockchain or use blockchain to make my business more efficient and better? But taking a step forward, also, can I actually issue products or tokenization, which is a word we can talk about later. You heard a lot on issuing products actually on the blockchain, right? Versus crypto as an investment, which is, are there interesting investment opportunities that I can offer to my existing mainstream clients so they can also get the benefit from the growth of this technology going forward?
Oh, I love that. And look at you. You're such a natural in doing the segue from revolutionary to the evolutionary. We'll get to that, but I think you said something very interesting that I'd like to point out, using the analogy of a house. I think the other thing too is when you're in a house, right? Like everyone knows what a house is. You don't have to convince anybody of the infrastructure of a house. Everyone kind of is agreed upon what the infrastructure is, how it needs to be built, and all of the pieces it takes to build a house and maintain it and go there. And then when it comes to upgrading a house, let's say you're an owner of a house, then you have to make that decision. Do I want to either just, make an organic evolution of the house and keep building and kind of Frankenstein in all these pieces on my existing infrastructure, versus do I just go buy a new house? And, when you buy a new, there are pros and cons to both, and you could do either one, right? And I think right now what I see, and I would love to get your opinion before we go into the evolutionary, is we still just don't have an agreement that there is this infrastructure that needs to be evolved. It seems like there's so many groups and communities out there, whether it be, government or geographic or, private, where there are no problems here. We're good with the infrastructure. We don't have a 1910s old house. We're perfectly good with the 1910s house. It's been operating for 100 years. We can just keep evolving on top of it. There's no reason to change the base layer infrastructure. So I guess I'm seeing that kind of dynamic still, where we still have a lot of convincing you just to agree that there is this completely new option that is, trusted and can be done.
Well, yes, that's definitely the sentiment, but I would point to probably two things that's definitely worth noticing. So first of all, let's think about capital market as an invisible hand, right? Sometimes it's not like what you think you want to do, it's what the market force you to do because your competitors or your clients are asking for it, right? So I remember we have done quite a few, I mean, most of the large institutions have done quite a few surveys, right? And your fund, you deal with a lot of RA clients. A lot of times it's client asking you, oh, how can I invest in Bitcoin? How can I invest in this technology? That force you to think about, first of all, crypto as investment thesis, right? So the notable thing I want to point out, and it's on the news every day, is about, oh, can we get a Bitcoin spot ETF approved, right? So I cannot handicap when that will happen, but obviously, as everybody know, now there are 10 to 20 ETF issuers, all established TradFi institutions trying to file for a Bitcoin spot ETF, right? Think about that. It's really TradFi's effort of trying to bring in crypto in the existing rails. So yes, Bitcoin investment is new, Ethereum is new, but if I wrap it in a traditional finance wrapper, whether it's ETF, which is now under review by SEC, or private funds which already exist in the market, right? Or separate managed account. But basically what TradFi is trying to do is let's bring in those interesting investment opportunities, put them in a traditional wrapper that our clients are already familiar with and offer it to our clients, right? So that's definitely happening. And obviously, if ETF is going to be approved, that will drastically reduce, I would say, the entry barrier or the UI UX issue. Now people can trade Bitcoin ETFs on all the existing brokerage systems they already have, right? So that's one area which is very interesting, and I would say it's already happening, right? So if you ask any investors right now, if you want to invest in Bitcoin, there's a way to do it. So the second part is more thinking forward as you talk about, is blockchain really happening on it helping my business, right? So I wrote an article recently for CoinDesk talking about the concept of tokenization. So amid it's still at a very early stage, right? But think about the future of conducting peer-to-peer transactions on chain. This is really, I would say, I would call putting the old wine in a new bottle. What do I mean, right? So you've seen, for example, a big securitization platform is tokenizing a KKR private equity fund. What TradFi institutions are trying to do is, my investors already invest in those traditional, whether it's mutual fund, private equity funds, or real world asset, right? Can I create an on-chain version so those assets potentially could also be traded in a new format, the new bottle called tokenized format, so they can be traded freely on chain, right? So this is another effort. I would say these are really two parallel rails. One is putting a new wine, which is Bitcoin ETH and potentially other tokens, in an old bottle, which is our ETF or other TradFi wrappers. The other is putting the old wine in a new bottle, so all the existing funds on chain, right? And we'll see how interesting this two will potentially converge. But currently, at least they're trying both things.
Well, I think that goes into the evolutionary part. So we're already kind of diving into it. And I appreciate your response to that. It's very eloquently put. I usually pose those questions because I think it's really hard for people to visualize or truly kind of take that fundamental understanding of kind of what's happening. And usually a lot of emotions, a lot of human things that muddy the thinking about it. And so when I have someone like you who can go into that, and even better than me, I always like to get that out. So that was a really good portrayal of kind of the two different parallels. So let's kind of lean into that a little bit now. So take me through a little bit more and touch on the institutional adoption, and maybe let's start on the new bottle, right? That's the crypto as a technology, the new bottle trying to get the old wine into a new bottle. Take me through the institutional adoption so far there.
Yeah, so I would say the institutional adoption. So tokenization is not new, right? I actually, because I came from a structured credit background, I was always thinking about tokenization is similar to securitization. It's really finding out a way of structuring investment that investors can invest in. And also later I went to the ETF route, which is I view tokenization as ETF, maybe in 1997. I think SPY probably came out around that stage. It's like ETF industry 20 years ago. Imagine the potential growth and disruption it can bring to the industry, right? So when you think about tokenization, why it's the topic du jour or what institutions care about, it's really thinking about bringing in the new business for them potentially, right? Think about Coinbase now have 110 million wallets. So if you can tap to those demand, then that's basically I already have the product. I just want to sell it to either crypto native crowd or newer generation who are more used to this peer-to-peer concept of transactions. So that's one. And second, if you think about, I would say efficiencies, right? We just talk about the investment manager layer, market maker layer, settlement layer, right? Think about it may already work so well for mutual fund ETFs, right? Or public market, but when it comes to private market, there's so much information, you may be surprised, right? Not only there's information, but also the information are still in a very inefficient sort of paperwork type of format, right? Thinking about all the data that goes into describing a deal and all those private equity or private funds are not marked to market every day, right? So there's limited transparency in not only what's in it, but also how do you properly value them.
Yep.
And also think about, I mean, you probably know this too, a lot of your clients may own private investment, right? Think about the subscription and redemption process, how much paperwork you need to go through. Yes, you can DocuSign, but it's still a series of paperwork. In fact, I think a lot of institutions are in various stages of automating that process, right? DocuSign itself is some sort of automating the actual manual signing process, but also subscription redemption. If you can click a button and buy it, it's much easier than having to sign many documents, right? So basically making the purchasing process easier, purchasing and redemption process easier, but also giving more transparency to clients in terms of the fund itself is actually pretty, I would say, revolutionary, right? So if you look at sort of the private fund or private investment market is really hot right now, given public market are facing a lot of headwinds, right? For normal investors, obviously the sophistication level matters, and we have accredited investor, qualified investor rules, right? But if you think about the eventual world of democratizing investing, it's really about giving investors access to diversified return streams that can improve your 60-40, right? And so currently a lot of investors do not have access, even if they are accredited or qualified, is because of the access issue. So I think tokenization or basically bringing things on chain would solve that, right? So, but then challenges remain, right? As you also mentioned, different institutions are doing various stages of proof of concept to actually trying to launch something. I mean, the biggest adoption now we hear about is tokenized money market fund, right? It's a very interesting concept, obviously, driven by now the real world rate is actually higher than a lot of the DeFi yield that people were chasing before. But ultimately, if I I can access to a money market mutual fund or ETFs, I don't have to buy a tokenized version, right? So this is where I think it's a very successful proof of concept, but the true demand where you can unlock is probably tokenizing something else. And then there's a long way for us to go, right? And the other important thing you mentioned is really interoperability, right? So which chain do I tokenize it on? How can all those tokenized securities, currently they are trading on ATSs, right? So alternative trading systems, which is under SEC jurisdiction, you have to get approval or license to be able to do that. And what it ended up with is walled garden approach, right? So yes, I created this on-chain thing, but it's trading in, you're trading a walled garden. So it's not really facilitating peer-to-peer transactions in a broader way. So there are issues to be solved there, not only from a technology perspective, but also from a regulatory perspective.
Yeah, and I think the benefit to at least going through this is someone has to take the leap to actually go do those proof of concepts, and shout out to who's doing that. I think Franklin Templeton is the biggest one that comes to mind, and what they're doing it. And I think there's findings from other proof of concepts from certain groups. The NYDFS partnered up with a few other institutions, and they're finally releasing some of their findings. But what comes to mind when you go through all of that is that no one's going to develop the trust for these new systems. No one's going to develop okay, this is worth it now, until we go through these initial steps. And these are actually the steps I point to when everyone says, whether they're an institutional or whether they're, your random person building in this space or who wants to invest in this space, where, man, I just feel like I missed the boat. I missed out. Like I'm too late. And and it's funny because you hop on a webinar, and whether it's crypto native or TradFi native, and you get people will say different things across different timelines. For some people, we're in the 5th inning. For some people, we're still in the dugout waiting for the Star Spangled Banner to finish. And I think people are just kind of confused on where the market is. And I think one thing I'm gleaning from this is that we are still very, very early in both the adoption from an institutional standpoint, but also from just a public retail standpoint.
Yeah, I would put all the players who are interested in the crypto space into 3 categories, right? One is really big traditional financial institutions. They're very careful and cautious when they think about entering the space. And again, you see a lot the adoption sort of, or at least the sentiment sort of picked up because of the BlackRock entry, because of Fidelity, because of Franklin Templetons of the world, right? I think it's fair and it's prudent for them to be very careful because you don't want to basically rock the current system when a lot of money is tied to it, right? The second category, which is you see a lot more development here, is big, I would say centralized crypto companies, right? Whether it's Coinbase, whether it's Circle, or even PayPal. Now they're launching this stable coin. So what they are trying to do is they are trying to be the white knight or the good compliant players, but they also have this new business that you can afford to run really fast, right?
Mm-hmm.
And kudos to Coinbase. Not only they establish trying to be compliant crypto exchange, but also they're developing the space or this layer 2 solution to diversify their business to be able to not only just be an exchange, but also run as a gateway to the Web3 economy, right? So you can see they're trying to be compliant, but they're pushing the boundary, right? The third category is all the crypto native companies, DeFi protocols, different sort of entrepreneurs. Now I'm closer to that space. I really have a deep appreciation for all those entrepreneurs who are really they're driven by the passion. They have a goal. They have an ideal of where the world should be, and they are doing everything they could to work toward that goal under limited funding, limited resources, and unclear regulatory scheme. Obviously, there are also fraudulent activities going on, but the previous cycles and previous sell-offs hopefully have washed out some of the bad players. And I think those companies, regardless of where regulation is going, it's entrepreneurs that are going to be the real driver for technology innovation, and they may sort of either grow to be the next Google, Amazon, or it could be, I don't know, absorbed by some of the bigger companies I mentioned, but the innovation would not stop, right? Mm-hmm. So this is where I really see hope in terms of continuing growth in this area.
Well, let's linger there for a little bit, because I really love what you've been saying, and we take a similar approach. Like one of the struggles we have is working with the more crypto natives and more of the centralized crypto entities who are more on that side of the spectrum, really trying to introduce this kind of careful and cautious that you mentioned before. And we're not a big institution, but we have big traditional financial backgrounds and experience to understand that in the world of finance, when you do things too fast and things haven't been properly stress tested, destruction events happen. And that's where we can't when you can't put people's money at risk in that way too fast, too quickly. And and that's why there are accredited investor rules. That's where there are all these risk management techniques and all these things. So it's not that we want to kill crypto or we don't want it to happen. It's that we do have to take this careful but cautious approach. And you can do that in a way. And in fact, we try to get it to where this is what you need to unlock all of these things that you guys are so passionate about. That's kind of the way you need to approach it in order to get to that place that you want. And so I would love to kind of dive in with your experience on the research side and going into this crypto native world and talking to these entrepreneurs, because I think there are a lot of, especially this audience, who, if you only read the headlines, you would think that 90% of everyone who operates as an entrepreneur in crypto world is just a scam artist trying to get people out. But is that not the case in your experience? What would you kind of allocate towards, because you did mention that there are bad actors, and I think there are bad actors no matter where you go, especially in traditional markets. But what would you say more of the reality is for you now that you've gone into that world?
Yeah, I think, I think the crypto market has evolved to extent where it's more mature than probably even 2 to 3 years ago, right? So if you look at all the potential liquid tokens that are traded on the market now, I would say three buckets again, right? Bitcoin East now is their own bucket, right? They are
Mhm.
very mature. They have established a Lindy effect, and they are very much to a certain extent driven by macro and regulatory development rather than the fundamentals themselves, right? The second bucket I would say is a blue chip decentralized applications, right? Or infrastructure plays, right? If you think about so what I did at CoinDesk Indices is really establishing the sectors and use cases, right? So DeFi, for example, is a very established use case. You have a couple of players, Uniswap, its trading volume now rivals Coinbase, right? And then on the infrastructure side, obviously now a lot of development on the layer two side, which is a lot of development, whether it's layer two, alternative layer ones, which is trying to find out ways to make blockchain cheaper and faster, right? Which could potentially fuel the next phase of growth. So there are a couple of good players there. And the last bucket, which is the hardest, which information is not always available, so it's or easily available. So those are the smaller emerging plays, right? They are trying to focus on gaming, for example, is a use case where obviously it's a big category, but currently because blockchain is still expensive, nobody is going to do full on-chain games, right? And then there are other categories where blockchain technology could fully unlock, but they haven't got there yet, right? So if I take a step back and think about our research approach, it's funny, our founders are actually emerging market business owners and investors. So if you think about, crypto investing is almost like emerging market small cap, right?
Yep.
So I think not only you have to understand the business itself, both in terms of how the company is generating revenue, what is the product market fit, what is the potential growth in terms of their user base and revenue, but also you have to think about valuation, which is how does the value accrue to, in this case, token holders, right? And lastly, which is often not neglected, especially for a TradFi person to do research in DeFi, is this culture aspect, right? So emerging markets, I came from China. I understand totally how culture and political systems could change how people do business. Same thing applied for crypto too. So a lot of times it's how you engage with your community, right? Both in terms of developers who want to build in your ecosystem, but also users, why users should choose you other than other competitor platforms, right? So basically how the protocol is trying to build up their network effect is super important,
Mhm.
especially for earlier stage projects where there's no tangible number to really analyze their revenue or fees, right? It's really about assessing the potential, and assessing the potential a lot of times come down to how they build up their community, how they are building that network effect.
So this sounds like a very rich and robust process at which you go into these crypto native organizations or evaluating the people themselves. Because obviously, like even though these are decentralized protocols, there is some sort of human behind it at some point. So again, take me through now. Have you found it easier to try to find the bad actors, if you will, or has it only become harder?
I think, with all the development that's happening in crypto, it's very hard to keep track of everything that's happening, right? Not only about bad actor, good actor, just about the development itself, right?
Mhm.
So what we have done is sort of start with top down, right? Because you cannot cover everything. I mean, I was a quant investor before. I was used to let's get the data and trying to find out patterns and trends, and the data is not very available, right? So we always start with top down. What are the top theses that's going to drive our investment, drive growth in this area for the next 1 to 5 years, right? So the benefit of being a liquid venture fund is you don't have to, you have a lockdown period where you can really put the money to work, right?
Mhm.
So what we have found out is really a couple of theses, right? For example, blockchain is becoming cheaper and faster. What does that mean? Two things, right? Investment opportunities in which players is going to benefit from cheaper, faster blockchain, but also which infrastructure players is really driving or being the leading provider in making that efficiency happen, right? The second trend being institutional adoption. We know it's happening, right? Whether it's ETF approval, whether it's tokenization exercise, whether it's, Coinbase trying to, build up their network effect, right? What does that translate into investment opportunities, especially given sometimes the challenge of smaller protocols? Are they going to be gobbled up, or can they still compete, right? And then the third area is really thinking about where sort of this macro and regulatory landscape, right? Those two are really the near-term catalysts, right? Currently, we are sort of, if you see, there's a big sell-off 2 weeks ago. Now we kind of stabilized, right? There's resistance point for Bitcoin at 26,000, and ETH is stabilizing too. Where do we go from here? I mean, now we are, after Labor Day, right? Everybody will be back at work. So what will happen from a macro and regulation standpoint? So this is really what we are trying to look for. And then lastly, when you think about, so basically this is a top-down approach, right? Starting from the thesis of what we think is going to happen, translate for each thesis into tokens we should do deeper dive research for, right? Because as I mentioned, it's sometimes even it's easier, although it's not easy for me to say that, to forecast the revenue and potential growth, but it's very hard in terms of thinking about how does the value accrue to the token holders. Because as you may well know, first, not every project needs a token, right? And two is when you have a token, it could be used for different purposes, whether it's governance, whether it's for utility, whether there is certain revenue sharing or not, that could significantly impact how people perceive the value of the token, right? And lastly is now, let's say we want to analyze, there's maybe 10 to 15 tokens we want to do deeper diving. Now it comes down to where do you source data in terms of understanding the growth potential, evaluating their community engagement and network effect. And then can we build, even if it's not a absolute value framework, can we analyze the relative value aspect? So hopefully we can find the winners out of the use cases that we think are trending. And then once you have that framework, it's not like have it done and forget about it, right? You have to constantly monitor it, especially when critical point happen in terms of development milestones. Sometimes it's hacks, sometimes it's macro regulatory trends. So I find that, challenging, but also rewarding. And what's more rewarding for me is seeing a lot of my TradFi colleagues, you were one of them, right? So it's like all being attracted, both from an intellectual, but also from a growth perspective to the space. So if talents are staying, and that's my most bullish factor, right? If talents continue to come from TradFi to DeFi, then there's definitely more smart people, and hopefully we can all make the sector better.
Well said there. And I have so many things I could say on that. But I think one of the things that came out to me as you were speaking was this idea of the challenging of the ongoing due diligence and the ongoing monitoring of all those different layers that you mentioned. And I think that's one of the most challenging parts for us that we found as well, is it's not just enough to do the initial research and do the initial hypothesis testing and go out, do the top-down approach, and then maybe implement some bottoms up as well, and kind of have this hybrid version of research and analysis and come to some conclusions. It's then the ongoing work that it takes in order to see if that holds of what you found, or if it breaks, or if it looks like it broke but it didn't break. And then like there's this challenge of really understanding. That's where we're kind of, it's all kind of a new area. And if you don't have the right people with the right minds going into those things, it's going to be really hard for this industry to professionalize, if you will, or come up with the standards. So I think that's really, we see it as our duty and our responsibility to stay, just to apply these. And that's kind of one of the value propositions of having a professional manager, because it's a full-time job just even doing that, even just a quarter of that, let alone 100% being able to do that, which is why you see the crypto companies who, they're the investment managers, they're hiring full teams just for those things. And that's kind of one of our goals is to kind of expand there. But again, I think I kicked off this kind of session is it easier or harder to kind of snuff out the bad actors, if you will? So I guess if you could round this out for us after describing all of those layers, do you find it easier or harder, or is that not even the way we should even think about approaching it?
I would put it into also the evolution versus revolution framework, right? I think the approach, both your team, my team, what we are doing is revolutionary in the sense that we are analyzing a new emerging asset class, and we are creating, I always put it in sort of the known knowns, which TradFi people are very good at evaluating equities, right? And then
Mhm.
there's known unknowns. Now with all the blue up, there are additional things you have to look at. There are still a lot of unknown unknowns. Now
Mhm.
I know more of this is the alpha, right? Or early, digital crypto asset managers. They are trying to establish their framework, their research process, so they can properly discover the unknown unknowns, right? So I think this is revolutionary. But then what's evolutionary is once you have this framework, right? I think I have seen not only asset managers, but research and data providers and tool providers, really what they are trying to do is trying to sort of learn from asset managers and build a framework or tools together so we can monitor them better. And
Yep.
think about like must-haves in asset management, right? Do you have ways of doing performance attribution? Do you have a proper way to define sectors, right? To define your sector allocation and security selection benefit, right? Do you have risk frameworks? I see people are doing that. So I would say it's an evolutionary path for us who are doing deeper dive research. This is our alpha sauce. But I also want the industry to mature so I have better tools and investors have better knowledge in terms of properly looking at those projects. And they also serve as a good, I would say, check and balance for all those projects so that if you're doing things that shouldn't be done, there are better ways of discovering that. So I do see, if you think about sort of crypto market cap is at 1.1 trillion now, US market cap alone, US equity market cap alone is 46 trillion. Global is 100 trillion, right? Think
Mhm.
about as the asset class mature, as more people have trust and more scientific ways of looking at it, the growth potential is really huge.
Yeah, and then don't even start factoring in, fixed income markets or debt and private. Yeah, so
Yeah,
the numbers are there to support as to why it's worth it. And then that's why it's always I think again, just like with the any type of innovation, there's going to
yeah,
be that the curve of adoption, right? So right now, for us, the way we see it, we're still in those not even the early adopters, but the ones before that, the ones that are just the frontiersmen, if you will. And you're talking 10 to 15% of the market that's even in those first two groups, the frontiersmen and then the early adopters.
yeah.
I would still say we're only halfway through the early adopters actually adopting.
Mm-hmm.
And we still have to go through some of that early adopters still to come in, and then we can go in. So we're still so early. But I'd like to kind of use that now to take us into this last section. I'd love to just get out of your brain here while I have you on the podcast, which is kind of what are you seeing as those notable opportunities now? Now that we've gone through different market cycles, I think, you mentioned, blockchain becoming cheaper and faster, and understanding more of what blockchain technology is enabling. Can you take us through maybe a little bit more on what you see as the notable opportunities in the future?
Yeah, sure. So there are a couple of areas we're looking at. So first of all, still, it's really the overhang of regulatory clarity, right? So once the ETF is approved, we do view this as a major driver for mainstream adoption. And think about Bitcoin and ETH, the two biggest and longest surviving digital asset would definitely benefit from that, right? So that's one. And second is when you think about Ethereum as sort of, I always make the analogy of layer one or blockchains as nation states, right? So they are really providing the security and infrastructure for other businesses to build on top of them, right? So Ethereum nation states, for example, right? Currently, everybody's talking about yield and staking. So the staking ratio, meaning the amount of ETH that's staked, is only 20%. That's far below the other proof of stake chains, which is more like 50 or 70%. So if you look at the data, right, there is actually data to look at the amount of ETH staked, especially after the Shapella upgrade when you can actually withdraw, right? It's continually increasing, right? So
Mm-hmm.
think about if the stake ETH is going to increase, who will benefit from that, right? Think about the staking providers, especially on the liquid staking side, given people not only want to stake, but also want liquidity. So then there's this multiple layers, right? So if ETH thesis is going to play out, if regulatory environment clarifies, right? And we know that staking is going to grow in ETH, then there may be opportunities in sort of staking providers. And on top of that, there are also potential yield opportunities that you can build on top of liquid stake ETH, right? So that's one area we're looking at. And second is all this infrastructure play, right? I think jury is still out in terms of is the solution? Is other layer one the solution? Which L2 will dominate the market, right? So there are a lot of players there. I think it's the key is network effect, right? And I think in crypto, sometimes we talk to quite a lot of entrepreneurs, and people are saying sometimes not necessarily the best technology that wins. It's a good technology that can build up, find product market fit and build network effect quickly that will win, right? So looking from that angle, you can evaluate current infrastructure providers who would likely dominate the market, right? I remember reading the From Zero to One book from Peter Thiel, and he's saying pretty much capital market is about monopoly, right? Think about who is going to get the biggest market share. So that's one. And lastly, I would say is going back to, given adoption evolution versus revolution, right? Given it will take time for people to adopt, I think for projects and use cases which have been through market cycles and have really shown product market fit and growth potential, those are likely going to benefit and grow more. And from a valuation perspective, once risk sentiment is back, those blue chip players will probably benefit a bit more. So that's just three we're looking at, but the market is changing every day, so we're constantly looking at the market and trying to assess the narratives and the winners. So
yeah, I think the amount of dynamism and that's required to be able to not only get in terms of it as an investment manager, to get in, establish a thesis, establish a presence, get the flow in to be able so that now you can operate and go out and prove the thesis. I think the amount of dynamism then to stay in, survive, and then evolve with the markets is actually quite extraordinary. And I think that's where as time goes on, the people and the teams doing things, I guess, quote unquote, the right way or in the most disciplined way are the ones that are starting to show themselves. So that's where I get, a lot of this is just a time factor too. Those players and those winners, I guess, well, it's just going to take some time, and a lot of people aren't comfortable hearing that. And it's interesting that you mentioned the 0 to 1 by Peter Thiel. It's kind of my go-to Bible for everyone who comes up to me. He's like, Mark, I would love to invest in this, but I can't see a discounted cash flow statement to this right now. It's my one book that's really armed me with the best tools necessary to come back and help people shift their mindset from when they approach the asset class. Because I think a lot of people do, especially when you got your traditional financial players who live and breathe in their own space within the traditional world, and then they try to apply the same things and shoehorn in their mental models and their systems of thinking into the same way crypto is. And that's where every time I present that to them, it's really, that's the thing that gets them to finally take a bit of a leap over with me, is just to kind of switch those mental models a little bit. And that book has been tremendous, because while we have a lot of traditional financial colleagues, they come from past jobs and everything, everyone kind of works in their own world. The world is the finance world is big. And so when you're trying to bring multiple different segments and layers of the traditional world over to this new world, it requires a very different type of thinking and mental or
absolutely. I think you hit the nail on the head when people ask me like, what is your edge, right? Especially when it comes to investing. So in crypto, I would call it's for lack of better words, interpreter alpha, right? So you talk about people have different views of the world. TradFi people have a view, crypto native people have a view, and I think the alpha is really arbitraging between different views and find out where the converging point is. I think for people like you, like me, and a lot of people who are coming to the space is really understand both languages really well and being able to connect dots, and that's really helpful not only from an investment perspective but also from a building perspective, because you do want to come to a world where people can fully leverage the benefit of the technology, but also do things in a compliant fashion. And to be able to do that, we need people who can talk in both languages, but also people who have an open-minded mindset, who can constantly learn from each other and be able to adjust their world point toward what's going to happen in the future.
Woo, man, I could not have said it better myself. Very well put. Yeah, it's one of the things we get very this conversation, for example, and our relationship is probably one of the things that gives us hope, and the reason why we've really taken on this duty and this responsibility is, we're we're not going anywhere, and we're going to do what it takes. And sometimes it means we're going to say no to building the newest complex thing in the system, and we're just going to really make sure we are the best at the simple things so far. And I think that's really where, while everyone wants to kind of leapfrog to the stage of development to where you need all of these complex processes and everything in place to be able to now be able to generate alpha in those ways. And actually, generating alpha in this space is actually not nearly as hard as everyone likes to make it out to be. And really, there are a few key decisions that we found that are the most impactful to being quote unquote successful. And really, if anybody, and I would love your thought on this, right now, the successful is just being able to survive and not lose your, I guess, I forget what the term that a lot of the crypto need is. It's pretty funny, but it's really just, you can't make the wrong, so many of the key wrong decisions. And it's just those key few that works. The main one is probably entry. The second one is how you exit. And then the third is, what are you doing in between? And that's, rebalancing isn't the decision, but really it's like, what are you doing in those decisions in between? And that's where we find a lot of people making the destruction decisions. And that's where you're trying to make too many decisions that you really can't make sound decisions off of. So that's what we've honed in on as part of our value prop.
And an important requirement I ask for my team, and I'm pretty sure you're doing that too, especially you have to talk to your end clients who are not necessarily crypto natives, is what I call ELI 5. What it means is explain like I'm 5-year-old. So we do that not only when we face client, but also in our investment discussions. If you cannot explain and articulate why we make this investment, how it will work, then I will seriously doubt you understand it fully, because crypto is so complicated. There are so many things happening. Sometimes I want my research team to understand, hey, you got to explain to me like I'm 5-year-old, I understand nothing. I'm not afraid of asking dumb questions. Really try to get out what really do you think is going to drive the future growth? What are the risks we should look at? Why we should invest in this? Why the valuation makes sense? If we invest in it, what should we look at? When do we get out? When do we get in? I want to do deeper dive for every of our investments to make sure that the team fully understand and fully support the decision. And I'm pretty sure when you talk to your client, you can fully support your investment process and the thoughts behind it.
Absolutely, 100%. So I'm going to use this as we've covered a lot today. I think we need to let a lot of this simmer. One of the things we didn't, maybe we'll have to bring it back on the episode. I'd love to know about the conversion. So to tease everyone, for us, kind of the way we think about it is we think that there's this bigger thing happening in the world where it's not just about blockchain. While that's how we initially got in, and that's kind of where the initial investment thesis plays, and it still holds true to today. I think AI, as well as quantum computing, edge computing, or types of computational power that's coming as well, I think is forming this triangle that I think together is probably going to be the thing that we all think about, but we just can't articulate yet because it's still being born into the world. We didn't get to talk about that, but I guess leave everyone with an end thought on teasing, like on the convergence of AI or maybe even other things that could influence blockchain technology.
Yeah, I think AI and crypto, they are perfectly made for each other, right? I really see three big areas where AI and crypto can help each other. One is AI as a tool for crypto, right? Because blockchain, naturally every data is on chain. You have vast amount of data to play with for whoever can use the AI tool to derive insights from those data, whether it's investment in crypto or it's some of the decentralized applications using AI to help them develop better algos in, for example, in market making. That will be useful, right? And that's gonna probably materialize very sooner, right? The second is I would say crypto as a check and balance, blockchain as a check and balance for AI, because now people are afraid that machine is taking over the world. A lot of the fake news are driven by machines. Blockchain really is creating this immutable ledger, which you can actually trace to the source, whether it's proving of humanhood or proving of ownership or of who is creating the work. But also, if you don't trust AI decision, but you can also break it down into steps in terms of how we arrive at the decision point, that's very interesting. And blockchain, given its censorship resistance and decentralized, you can do that. And lastly, I would say is given AI needs a lot of computing power, right? So there are already earlier development in terms of decentralized computation, decentralized storage. So if you can leverage those resources in scale, it will also speed up the AI developments.
Ooh, there's your tease, everybody. That's the tease. That's on the next episode that we get back together, maybe a few months from now. Who knows? But
yeah, to be continued.
Kelly, it has been such a joy. I always like to end our conversations with a couple rapid fire questions that you aren't prepared for.
Oh, wow.
Like one word or one phrase answers only. Are you willing to go through a few of those with me?
Let's do it.
Okay. All right. So the first one I have for you, given what we've talked about a little bit today, what's the biggest or what's the one red flag that comes to mind that you think all investors or potential investors should be aware of when evaluating crypto token projects?
Ooh. I would say community engagement. One word, community.
Community or community engagement. I love that. So what's the one resource is for anybody coming into this space, whether they're TradFi coming in or someone who's intellectually curious, what's the one resource you would give them to learn about as they enter in that journey?
Ooh, can I reuse the word community? Because I find talking to people, you get more information than reading.
Oh, I love that. Oh, is there
or
a
listening to a
community?
podcast?
Listen, I didn't say to say that. I promise everybody. That's great though. I appreciate that. Okay, so listen to our podcast. Anything? What did you use? What was one of your first resources that you when you came in, and was it 2017? What was one of the first resources?
Yeah, I think podcasts are really helpful because they're getting better and better. My favorite is Bankless, not only the content, but also the vibe. The other is I find once you establish your network, talking to people, and I think asking the right questions will get you more information than just blindly reading. But it requires you to first establish a framework first in terms of where to look and what are the key questions you want to ask. But I do say, in crypto, community is so important and it's very welcoming. So you can find great people where you can bounce ideas from. And I really value the network and the people I have known through the years, including obviously Mark, yourself.
Well, thank you for that. So it sounds like find a trusted community to take the leap with. I got you.
Absolutely.
I love that answer. That's such a great answer. And the last one, Kelly, for you, why is this all worth it in one word or a phrase?
Interesting. I just find that intellectually interesting. I work in innovation. I always want to find intellectually interesting things to do.
Oh, I love it, man. Well, I just want to say thank you for going through that with me. Thank you for joining me today and having this very open conversation about it. I think in a previous life or in a previous world, we may be seen as competitors and not sharing ideas. But coming together like this is such a joy for me. So thank you so much for joining.
Thank you, Mark. I had a lot of fun.
All right. And Kelly, real quick, where can everyone find you?
I'm on LinkedIn, and I started publish investment weeklies on the Decentral Park website. So go to decentralpark.io. You can see all my research there.
All right. We'll put both those links up in the show notes for everybody, as well as a quick bio for Kelly. If you want to reach out, get to know her, she is fantastic. And everyone, thank you so much for joining me on this edition of the Asset Revolution podcast. Make sure to tell somebody today that you care about them. We'll see you next time. Cheers.
See you.
We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.
financial advisor, unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or tax advice. If you have individual questions, please reach out.